What is your investment philosophy?
My investment philosophy is very simple. All the hard-earned money has to be invested for wealth creation and not for short-term trading or speculation. The philosophy is to buy a share which can give you a growth, give you the returns which are significantly higher compared to very other comparisons that you can make, and work on it. But the philosophy is that when you buy and when you sell, it should be, you should plan the trade, and once the plan is ready, trade that plan. So that the things are, you are not taking a very rash decision, you are able to do the right things for your investments.
What criteria you use to select a good stock?
For me, I would like to understand, first of all, I would like to get into those shares where I am able to understand or absorb the business, what they are in. Once I identify that, the next step is that this share must have a huge amount of growth. Not the normal increase in the business growth, but should be certain things which can make the growth absolutely great. Like, for example, either an expansion, diversification, something which can turn around a company, something which is unusual which is happening, anything that you can think of which can give it a trigger. Buying a share for run-of-the-mill, that will give me a run-of-the-mill profit, so I prefer to identify the gems. I prefer to buy the shares which have not been so much noticed by the market. The moment it comes in the limelight, it immediately gets rated, re-rated, and the share shoots up very heavily. Instead of getting into the well-known shares which will give you a reasonable return with limited risk, it's better to, if you do a really good study and get into those kinds of shares which have a huge growth potential with a limited risk, of course. This is my philosophy of identifying those scripts, and I call them as gems picking.
What are the highlights of your research?
When you say the highlights of the research is that I like to be absolutely thorough with anything that I am doing. Whether, number one, the company, which means right from its balance sheet to the shareholder, the promoters, the shareholding, the pledging, all those things that anybody and everybody can think of. The second part, which is more important, is what business they are in and what are the factors which can increase, decrease their sales and profits. It is something which is so very important that when the conditions change, when you find that the certain raw material price increases and government duties come, so if you are thorough on what really is happening in the business environment, it gives you a great amount of return.
What is your message to the new investors?
My message to the new investor is very simple. You want to make a fast money without doing any homework, without doing a good amount of background check, you are likely to lose money. They are smart investors. If you want to do a good business, be a very smart investor, work very hard, understand the whole what you are buying for, and again I repeat the same thing, plan your trade and then trade the plan. Be very careful, it's your hard-earned money, you should make money by a proper study. Share market is full of a lot of speculators. Don't be a speculator, be patient, keep it for a long time, do a proper check on anything and everything that's happening, and even if you're keeping for a long term, keep a check on your portfolio almost every month or every 3 months.
What is your view on today's stock market?
Today's stock market, I have a theory which says that the Indian stock market is dependent on many factors, but the two liquids make all the difference for the stock market. One is the water and one is the oil. Water, I refer to the monsoon. If the monsoon is good for the country, the growth becomes very heavy. If the monsoon is bad, it does affect the economy of the country. And the second one, the oil price. The oil price, we are very heavily dependent on oil price. It decides our foreign exchange rates, it decides our fiscal deficit, it decides almost every factor which is important. So considering to today what the stage is in the stock market, we are at a stage where the monsoon is going to be great, so which thing is very positive, but certainly we cannot ignore the rate at which oil is going up at $80 a barrel, or if it goes up further, it's going to affect the economy, lower the GDP, it will have a major repercussions. So I would say that we are at a threshold where one thing is very positive and one thing is very negative. Nevertheless, we need to observe the oil and move forward. I don't think there's anything to worry. In this market, you need to do a lot of stock picking on a right mode. If you see, let's say the oil is going up, all the companies which are reflected positively of oil would be certainly very good. It will also hedge your portfolio in case the oil goes up further and further. And the monsoon is certainly discounted. So considering these factors, I think that I won't like to say the market is up or down. I don't like to do a stargazing in terms of where the market will be, but certainly these factors are normal. Indian political scenario, as usual, is very fluid. It will keep on happening. The global markets will continue to dominate here or there, but honestly those things matter little over a period of time. It might matter for a few days to the speculators, but not to the good investor. So I think the stock market is good if you are able to do a specific stock picking with a complete plan.
What is your definition of a long-term investment?
For me, the long-term investment is that anything that you can keep for 2 years and above. Now, why I say 2 years is that generally when you see a trend, when you see an expansion, when you see some growth coming through, it lasts for a long time. It doesn't happen in 1 quarter or 2 quarters. So that's where I say it's 2 years is fine. Normally, after 2 years, as I keep on saying, people keep on asking what is the target, and I would say every target is a moving target. So after 2 years also, you should look at keeping it for a long time, because I know we all have been keeping some of the blue chips for almost 30 years and 40 years. So long term, I would feel 2 years and above is fine.
What is the right time to sell a stock?
Oh, I have a theory which says, or not theory, something which my elders taught me, which is buy when they cry, sell when they yell. There are times when there is a lot of euphoria in the market, where it says that there is nothing wrong, everything is sunny, no clouds around, this share will go and touch, oh my God, 10 times and all. And when that happens, that's the right time I feel is worth selling. When everybody is yelling, saying buy, 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 that's the time I would love to sell. Otherwise, the second way would be that when I plan the trade in terms of buying for a specific reason, for a specific event, a specific trigger, when its result is fully discounted, I would like to sell at that point of time. So these two are my favorite part where to sell the shares.
How to select a good IPO?
Selecting a good IPO requires a lot of effort, because number one is that management is not normally well known. You go around, do understand the business, what they are doing, and study the full business inside out, how long it's been moving. Understanding the business is something which is common whether it's a new company or an old company. So that's a business understanding, and then discounting on it is something which is more relevant. Of course, in terms of the financials, which is normal, you'll get it for 3-4 years, but an IPO is not to be taken for a very short-term part of it. It has to be looked at the share which has a potential. The reason that actually the company is coming out with an IPO, what growth philosophy they has, will also matter over a period of time, and it's very important. Some of the shares will give you an immediate jump, but many shares, they initially may lie low, but then over a period of time will shoot up very heavily.
What is your forecast on the future of stock market?
My forecast is very simple. When there is money which you invest in safe things like banks and other things, they will give you a very minimum return. Stock market has a certain amount of risk associated with it. It is certain amount of like the money of an entrepreneur. If you invest the money and you monitor it on a very regular basis, you are likely to get wonderful results. You might lose for a little period of time, 3 months, 6 months, 1 year or 1.5 years, but if you have a patience, you are becoming per se an entrepreneur, per se an MD, a CEO. You can definitely see what is happening and get the rewards. And one of the things which I love the most about stock market, you are able to get in the market anytime and get out at any moment of time. Number 3, everything is pure white. The transactions after demat are perfect. I can't see of any other business where you will have such a kind of a simplicity with such kind of growth prospects but a certain amount of risk associated with it. So I do the forecast of the share market. Without share market, a good share market, the country cannot survive, cannot grow. It is not possible for the entrepreneurs to tap the money. I am very bullish that over a period of time, and especially for a country like India, with a huge population, the huge demand, the future is really bright. All that you need to do, have a patience and don't speculate. Do a good work and you will make wonderful money. I have not seen any kind of other businesses which have this kind of a liquidity, this kind of a simple working, not many issues involved, and it's a wonderful thing. But certainly please don't underestimate that you need to do a great amount of homework.
How much diversification is good in a portfolio?
Very, very, very interesting, because many people talk of you should not have a portfolio of more than 10 stocks or 20 stocks. I have a very simple theory which says, please limit your diversification to as much as you are able to handle. There are people who would not be able to handle more than 10-15 stocks. If you have a aptitude, you have a knack, you would love to do it, I would say 40-50 stocks, you can do a wonderful job. Let's take a particular industry, whether graphite, you can see take 4 or 5 stocks from there, that itself covers 5 stocks. So in my opinion, for a diversification, 40-50 stocks can easily be managed. They give you a total amount of diversification. One thing which is there is, when you talk of diversification, it is not necessary that you hold the shares of every sector at any moment of time. No, you can always write off saying, I don't want aviation, I don't want telecom, I don't want banking, whatever it is. The diversification should purely be on a stock specific, once you identify the sector which is likely to do well for the next 3-4 years. It is very, very important not to diversify the sector very heavily, because monitoring a sector becomes very, very difficult. Sometimes you think that you know everything about telecom, you know everything about aviation, but believe me, the deeper you go, the more and more you learn. So it's better to limit yourself to maximum 40 to 50 stocks, preferably of your 5 to 6 sectors.
Any other important point you may like to share?
I've been more on corporate for a long time. I got into shares very recently, but I certainly find that's a very interesting business. Interesting to the extent that it covers every gamut of the world, whether it is political, economic, industry, duties, imports, taxation. If you are interested, it keeps you up to date with almost anything and everything, and it covers wonderful part. Only thing which is very, very dangerous is the people who want to do the business without a proper amount of speculation, or who want to make fast buck and lose out the money. I shudder to think what will happen to them. So my idea is very simple. Either you do a good, sincere work, or you don't do the share market. Or you can give it to the people who can do your mutual fund or PMS, and they are the experts who can do it. If you want to do it, you'll probably make more money, as I think I do, but the thing is that you need to be very, very careful.
Thank you.
Thank you very much.